Hello and welcome to TA for Traders. I'm Nigel Croft and today is Thursday the 29th of March. In this short video we'll be looking at sterling. We'll be looking at the currency cross between the British pound and the US dollar. Today's the day that the Brexit letter has been received by the European Union. Let's see how it's affected the charts and how technical analysts will look at the picture. So here's the daily picture on the pound against the US dollar, and you can see that we've had a bit of a consolidation in the last couple of days whilst the Brexit letter has been written, has been sent. What we can see immediately is that the blue line, which is in the middle of this, is the 50-day moving average, and that this is now giving support. You can see the longer term trend, which is this red line, which is the 200-day moving average. That will give resistance. But before we get to that, if there was an upside push from this 50-day moving average, you can see that the market previously in this 127 up to the 127.50 level has done a lot of work before. These are all resistance lines in themselves, which would come into play before the 200-day, which is at 126.80. So it's a kind of a line of resistance, and some are calling it the line that's not going to get crossed at the moment. Likewise, on the downside, you can see that this 120, 121 level has acted as solid support. And so on the daily, the picture looks like we're still range bound, perhaps towards the upper boundary. On the momentum indicators, the RSI is still above 50, which is positive, and the MACD, as you can see, is high, but the short term is still above the long term, so that's a positive picture. If the 50-day can hold, there's still a chance of a break to the upside, but at the moment, just wait and see. Looking at the shorter term, this is the 4-hour. You can see that we had a breakdown yesterday, which has caused the picture to deteriorate somewhat, in that it took the RSI down and it took the MACDs down to indicate negative momentum. Here, we're still getting a bit of support from this uptrend which is the 50 average of the 4-hour. That's giving a bit of support as it moves up. Below there, we've got the 200-day. Even though it's still moving down, will give support. So here we look range bound as well. On the longer term picture, you can see this range that we've been in since October. With the highs around the 127 and the lows in the 121, 120 area. And you can see that we're actually trading on the 20-week moving average. If that can give the support like the 50-day can on the daily, you could see see a move to the upside. Looking at the daily support and resistance levels, the first resistance is at 126.16, with the second resistance at that downtrend in 200-day, which is at 126.80. On the supports, as I mentioned, the 50-day is where we're trading at the moment. It's just below where we are, trending upwards, 124.19. The second support at that 20-day, which is 123.22. So, thanks for watching this TA for Traders, looking at the sterling chart and what technical analysts would be looking at. Bit of a mixed picture. To be truthful, we're still in the trading range towards the upper boundary. Let's see what happens over the next few days to see if that 50-day moving average holds. If it does hold, and it could give a bit of a push up for the markets to test that resistance at the 127. Let's wait and see. Please remember, this is not investment advice. These are just my opinions and for educational purposes only. And to that end, please do read the screen, the disclaimer screen, which is coming on your screen now. Thank you.